Welcome back, folks. This is a short little ditty on Forex. Now, last time we spoke, I gave you a lesson on the previous Friday Asian range. And just to show you it wasn't a fluke, I want you to take a look at the economic calendar. And this was for November 23rd, 2020. And I'm showing the euro dollar and pound and dollar. At 3:15 during the London Open on Monday, you had French flash service PMI. Then at 3:30, you had the German flash manufacturing PMI. Then at 4 a.m., you had the flash manufacturing PMI. And then all the way to 9:45 a.m., you had the US flash manufacturing PMI. Now, I want you to take a look at the numbers that came out for these respective reports. The forecast was 39.2. The French came in at 38 even. The German PMI number was forecasted at 56, came in better at 57.9. Now, generally, the market digests this information as better or quote unquote good for the currency. So this number here, 57.9, being better than 56, indicates from a quote-unquote fundamental basis that the euro should view that as bullish. The flash manufacturing PMI number came in at 53.6, just modestly above what was the forecast at 53.2. Now remember this when we look at the price action. Okay, so from the fundamental stance, if you just look at these numbers, it looks like it should be bullish for euro. But you have to consider the economic calendar later in the day at New York at 9:45 a.m. Medium impact news comes out for the dollar for its respective manufacturing PMI number. The forecast was 52.5 and the actual came in at 56.7. These numbers here during London gave traders the willingness to want to be long. And then when we came up to the 7 o'clock in the morning time, that's when I made a notation on my community tab. I said, this is where you would quote unquote pay the trader, take something off. Now my students know that we were looking for a continuation lower on the dollar until we took out an old daily low. And that happens right when these numbers carry us into 7 o'clock in the morning New York time. That starts the ICT New York Open kill zone. Now, if we take this insight over to the chart, here's what we have just in raw price action. Now, I'll expand these charts in a moment, but I want you to take a look at the sudden reversals that took place. We are in a low volume week that's traditionally seen because of the US holiday. Now, I understand there's a lot of countries out there that don't celebrate like we do in the US, but there's a lot of money looking to make a move in the early part of the week. So just know that we have thin market conditions. That means there's not a lot of volume when the market is bullish or bearish from a central bank level. The repricing can be sudden and drastic. Now, I'm not saying this was all that drastic, but I'm sure it took a lot of you off guard today. And you can see the run here on the dollar just as a mirror image of what we see in the euro. And take a look at the price action in here. Study this for a moment, and then I'll add the annotations. All right, if you're not ready, just pause the video because I'm going to show everything on the chart in terms of annotation. Okay, so here's the previous Friday's trading. You have Friday's high, the low here, consolidation to the week, close. And then we have trading going into a new week. And then we have buy side liquidity resting here and the buy side liquidity from Friday's high. Now, here's the Asian range on Friday for Friday's calculation. And we do not use Monday's Asian range time. Okay. The algorithm is going to remember and refer back to the previous week. Now, if this was contrived, if it was all just made up, just coincidence, okay, this shouldn't work out like you see. But here it is. Now, you see other people out there talk about Asian range. And the idea that I use when I look at the Asian range is completely opposed to everything else out there. You'll never see another trader outside of myself or my students, obviously, refer to another day, or in this case, previous week's Asian range, because they don't consider something like that. Okay, so when you look at things like this, it's a signature that indicates that these markets are absolutely manipulated, controlled to the nth degree. And I want you to take a look at the Asian range here, okay, on Friday. So we projected up one standard range. So this is one Asian range measured above and stacked right on top of each other. Here's one Asian range below it, the second Asian range below that, and the third Asian range below that, okay? And this is all calculated on Friday's data. Now, if you carry these levels out into the future, you get the high here. What's the high of this candle? 1.1906 and 0 pipettes. Well, it just happens to be the actual high of the day. The Asian range low here for 3 ranges projected lower. We have a range projection of 1.18009 pipettes, and we're off only by a very small degree in the form of 1.1800 and 3 pipettes. So in this case, I'm only off by 6 pipettes. That's not bad. Now I'm going to challenge you to look at this idea here and find that with your pivot points. Okay, find that with TDI. Okay, find that with all of this other stuff. Okay, this might look like indicators. It's just measuring price relative to time. So it's my time and price theory. The first factor that's most important when it comes to algorithmic trading is time. There's specific things that happen at specific times. And if they don't occur, there is no setup. It doesn't matter what price is doing. If the time element is not there and then price overlaps with it, those two things have to agree. But the first and foremost and most important is the time element. Okay? So if you look at this idea, we ran above Friday's high and above the initial highs that were forming here and during consolidation here. The market had a protraction above Friday's high and then slammed into this level right there. Now again, thousands of you, tens of thousands of you got that alert this morning on my community tab. It's still there. You can still see it. And it says very plainly that take something off here. Pay the trader. Happens right in here and it hits that level, and this is what you get. Now, what's actually occurring here? The market sees the Euro Flash PMI at 330. That's what this level is here. Okay, so the low forms at 330. Again, back to the calendar. At 330, we had good numbers coming out. 57.9 versus the 56. It's modestly better, but nonetheless, it's better. They pump it up and above Friday's high to just any old random level above Friday's high. How do you know, Michael? How do you know how far it's going to go, ICT? No one could know these things. Well, here it is, using the idea I taught you for free right here on this YouTube channel. One standard deviation on the Asian range above it, using Friday's data, project that out in time. Bingo. Hello. Find that in your textbooks. So what happens after that? It hits it. That's where you would scale out, take profits, or completely collapse your trade. Or if you are a contrarian trader, you can look at that as an idea that, okay, we do have sell side liquidity down here, and Monday might happen to be a day where you have a little bit more retracement lower. This is why I don't like Mondays. Mondays tend to create the precursor to the weekly range. I'm willing to give up Monday's opportunities. Now, there's some of you that are hard and fast. Oh, there's no way I would ever give up trading on Mondays. I got to take every single day as a trading opportunity. Okay, that's fine. That's you. That's not me. But for me to have continuity, consistency, and longevity as a career trader, I have to have rules. And these rules have to be pretty significant in the form that I'm no longer going to just guess. I have to look at things objectively and measure them. And if I can do that with a fixed set of rules, with a protocol and process in place, then I'm going to hopefully overcome fear, greed, and emotional stimuli that would otherwise wreck another trader's mindset. The algorithm extends price above Friday's high. Once it hits this specific high, what high? 1 standard deviation on the Asian range from Friday's data. This is the same stuff I taught you the last time and years ago when I introduced this concept. At 9:45, this candle right there, what is going on there? Well, go back to the calendar. At 9:45, the US dollar has 56.7, much more improvement than what was forecasted at 52.5. So between the two here, okay, the dollar has much more quote unquote fundamental driver behind it being stronger or good for the currency. Again, this number here, if it comes out better than the forecast, that's viewed as a good or an underlying bullish scenario for the currency. Now, that's not always the case. And that's why fundamental data by itself can hurt you. So you have to blend some things. Now, there's a lot of individuals that would have looked at the price action this morning in euro and said, wow, this is going to keep on going, and not even consider taking something off or taking your position as a long and partially taking something off or paying the trader. Or they just may just leave their original stop loss in place and then get caught in something like that. That's why I teach my students and my viewers on this channel to take partial profits, because while you're learning and developing as a trader, you're not going to have the experience to anticipate the likelihood of this type of thing occurring. Now, remember what I said moments ago. The things that occur in price are linked to time and price. I posted that comment on my community tab on my YouTube channel right as we were going to the 7 o'clock hour, New York time, because I understand that the window of opportunity begins at 7 o'clock in the morning, and we may get a potential market reversal profile. You can't argue with it, folks. The element of displacement here comes on the heels of a much better number for the dollar than that was bullish for euro here. So the only thing the algorithm did here was allow the market to build up a protraction above Friday's high, hold price in here. What do traders see in that regard? They see bullish bull flags. Okay, they look at this run above these highs, they think that's a bullish breakout. What is remaining in the marketplace after it gets above Friday's high? We have a single swing low here. So yes, that's a liquidity pool for sell side, but more specifically, roll back to Friday's data. We have relative equal lows. What rests below there? Sell side liquidity. So if they are engineering a run on Friday's high, that's tradable. You can be a buyer there. You can be a buyer into Sunday's opening and ride that up for 45, 50 pips. There's nothing wrong with that. That's a 1 week opportunity or a one shot, one kill scenario as I teach it. But once we're above Friday's high, you have to be nimble. And also, I'm encouraging everyone as my student to respect the level of elevated risk right now because of all the uncertainty with the U.S. presidency, all the illness and impact it has on nations and their economies. We are waiting for the next shoe to drop. At any given moment, something can come out and cause a rapid repricing in the marketplace, and you will be completely taken off guard. Like today, if you saw this type of move here and it surprised you, it's because you don't understand the elements of the risk that's involved in this environment right now and technical analysis. Not in the sense that you can find it in the trading books, but the things that I'm teaching here on this YouTube channel, they're there because it's built around the principles of time and price and algorithmic theory. So the market has a displacement lower, running out Friday's lows, and projects right down to 3 Asian range below the regular Asian range here. Beautiful turning point there. Now, I'm going to challenge you, and I want you to consider everything I'm showing you here. How much more proof do you need to see? Did you see any kind of moving averages here? How about diagonal trend lines? Was there any harmonic patterns here? Did I use any zoo animal references? Okay, a harmonic bat, a harmonic shark, a butterfly. We don't use those things because all you need to know is time and price. And there are specific characteristics and signatures that repeat in the marketplace. And unless you are taught, you are never going to know these things. They're not in books. No other person's going to teach it but me. And now obviously I have students all around the world. We have an army of people growing all around this globe, and they're all starting to think like I'm training them to think. And it's not retail. What about this looks familiar? Because it doesn't look familiar to any of you outside of what I have taught in recent years. And this is something that you can see form every single week. Now, I don't know about you, but when I discovered this, it was like I was waiting for the knock at the door. I was waiting for the black suits come knocking on my door, because it felt like it was forbidden knowledge and I should not have it, because it repeats like this. This is what I refer to as Swiss timepiece precision. You can't escape it. You can't write it off as coincidence. You can't look at it and say, well, he never really said to use Friday's range for the Asian range for Monday's trading, because I did. In fact, it was just the last video I gave you on YouTube. So for the pundits out there that wrestle with me from the sidelines or sending me an email, just know that I do this to encourage you to dig deeper into the things I teach, because you haven't seen the half of it yet. For everyone in the United States, I would like to wish you a very safe and happy Thanksgiving. Everyone else around the world, please be safe. Respect the elevated risk that we have right now. And I'll talk to you again next weekend.